What's up, guys? Welcome back to another episode. Today is Sunday, the 19th of January, meaning tomorrow is the 20th. That means it is Trump's inauguration, his second inauguration, second term as the sitting U.S. president. And whether you like the guy or not, whether you think he's the big orange boogeyman, it doesn't really matter. It doesn't really matter in the sense that if you're into trading, if you're into investing, it is important who the leader of the free world is, because the sitting president just, decides stuff like monetary policy, stuff like that, and that just influences the economy, monetary conditions, risk appetite, stuff like that. It basically means if our coins are going to go up or not. Now, what I want to talk about before we jump into the charts, I want to talk about I want to say idea, but it's not an idea. It is conviction. It is conviction, just absolute conviction on Twitter that Trump will save crypto. Now, within the last 24 hours, he launched a meme coin called Trump, which went to tens of billions of dollar market cap. I think it even surpassed Doge in terms of market cap, which is, of course, insane, which just adds fuel to the fire. People who were already convinced he was going to save crypto are now just, they don't even consider anything else a possibility. And while I'm not here to argue that is not going to happen, there's something you should always remember, and that is you need more, right? You need more than a president that is pro stock market, that is pro crypto. It's just rarely enough on its own to sustain a long-term asset price growth. I mean, markets are extremely complex, right? Individuals are complex, and a market is just a countless amount of individuals stuck together. They all have dynamic wishes and dreams and expectations. They change all the time. Price, has influence. Price influences people's expectations, and expectations influence price. It is all very, very complex. And while leadership and policy can definitely influence sentiment, can definitely influence short-term price movements, I mean, there's just several critical factors that play a much larger role in determining the trajectory of asset prices over time. And when I say this, I do think that you want upward movement over time. You don't want a week of bullish price action, right? We want years of up only prices. And it's a complicated issue because there's a kind of a big difference between equities, traditional equities, meaning stocks, and crypto. But I do think there are two important factors that they both share, and that is liquidity and risk appetite. And crypto thrives on liquidity, right? What that means is people need liquidity. People need disposable income. People need the casino money, right? I mean, if you want stuff to go up, people have to start buying it. I mean, coins can go up in a vacuum, right? You see coins popping up here and there, but most people, when they talk about things like alt season, they're talking about the tide that lifts all boat, right? There's just a flood of money coming into the market, and it doesn't really matter which coins you bought; they all seem to go up. That is the definition of alt season to most people. Again, when people say alt season, I don't think anybody means, a coin here and there goes up 10, 20% and then dumps again. I think what we all mean and what we all want to see is just the market in general really, really going up by a lot. So what you need is loose monetary policy. That means low interest rates, generally speaking. Low interest rates means that borrowing money is cheap, right? And when when people talk about borrowing money, you don't. I've spoken to this in people in the past, and they'll go like, wait a second, I've never borrowed money. Nobody I know borrows money. Nobody I know live off of borrowed money. It's not about the individuals you know. It's about companies borrowing money. If companies can borrow money cheap, it is much easier to expand, right? You can add staff, you can add. It's easier to expand, meaning unemployment goes down, meaning there's more people with more money to spend, meaning people can easier go into debt on their credit cards without being slaughtered by the interest rates. It is just easier. It makes getting money easier. And loose monetary policy does tend to boost stuff like crypto and does tend to boost stuff like stocks. However, loose monetary policy can and does increase inflation. Now, while inflation has been reducing since the last CPI, I believe it was, and interest rates are again being lowered, we are so far away removed from being completely out of the woods. I'm not bearish at all. I don't think inflation is going to skyrocket again to 10%. I'm just saying we are not out of the woods. I'm just saying we are very far removed from just having loose monetary policy combined with the idea or the fact that inflation isn't going to pop his head up again. So that is one thing. You know, again, Trump can be the most pro crypto president in the world. It doesn't mean there's just going to be a flood of liquidity hitting the market. However, what is really positive is one thing that keeps institutions away from crypto is the regulatory landscape, right? There's a lot of uncertainty around regulations, and the regulations in the major economies like the US and Europe, while Europe is slowly dying. That uncertainty creates a lot of volatility. And if there's positive clarity coming into the market thanks to Trump in this case, I do believe we can see a lot more institutional money coming in. However, institutions aren't going to buy your L2 altcoins, right? They're going to be buying majors. The cool thing though is you now see some bigger altcoins, Solana, Ripple. There's talk out there that they're going to be ETFs approved for those coins as well, which is really bullish for those specific coins. But what I just said, I still do not think, and I might go as far as say we'll never see that again, the tide that lifts all boats kind of altcoin seasons. I don't think we'll have that anymore. You know, people think about 2017, 2018, where you just bought every single altcoin and it just went up like crazy. That was in a time where you had like 100 coins. Now you have 80, 90, 100,000 coins a day entering the market, right? If you go to Pump Fund, there's just coin after coin after coin after coin after coin. And I do think that in the past, when you started buying altcoins, it was different. The mindset of the average crypto investor was different. It was less people back then. People too thought that they were buying a lottery ticket, right? But I don't know, the time between entering the market and losing all your money was longer. People spend more time in the market. And the more time you spend in the market, the more time you have to, investigate stuff, research stuff, get involved in communities. If you get involved in markets now, you're like, you know what, I'm going to put $100 into an altcoin. You go to Pump Fund, you throw $50 at a coin. It is going to zero within 5 minutes, and that is not an exaggeration. It's going to go to zero within 5 minutes, probably even less. So the amount of time the average investor, new crypto investor, new crypto speculator spends in the market is exponentially lower than it was years ago, and I think that is a bad thing. Now I'm digressing. I'm really drifting off here. The point I'm trying to make is, very simple. You need more than a pro-crypto president. Look at Xi Jinping, leader of the Communist Chinese Party, Chinese Communist Party. He's obviously really, really pro-stocks. He's really done his best to aggressively support the stock market. But that doesn't overcome systemic issues, right? Like slowing economic growth, high debt levels, weak investor confidence. You don't take that all away just by being pro anything. So you need all of those things to come together to have the perfect storm. So yeah, that is I think what I want to say about that. So in summary, crypto depends just heavily on economic conditions, and while the president does influence and for a large part determine potential economic conditions, you need liquidity and monetary policy, to shape the backdrop. You will get speculation, you will get narratives, but that only drives short-term moves, and we're looking for the longer stretch, right? We're looking for a long bullish stretch. Also, consider the fact that most bull markets tend to last 2, 3, maybe 4 years on average. When we're talking about equities, and we've been in a bull run since I think January 2023. If you look at the Nasdaq, look at the S&P, the bull run began in 2023. The idea that we're just going to stick 4 more years of bull market to that already to those 2 years already, it can't happen. It can't happen. But statistically, it is not likely. So yeah, we'll just have to wait and see if that economic backdrop, if those factors are going to align with his general pro-crypto policy, and see if we get the the alt run, the bull run we're all hoping to get. Let's go over the charts, guys. Let's go over the charts. There's quite a lot of open trades that I have on. This fucking, let me show you something first, right? I have been using bar charts for a long time now, but when I post them on Twitter and when I do this stream, I usually go back to candlesticks, because I think most people prefer looking at candlesticks. I prefer looking at bar charts because it is less noise. I just prefer the one color kind of thing. Let me know in the comments what you think. If you don't mind looking at bar charts, I do prefer using this. If you prefer me using candlestick charts, just please do let me know in the comments, because I will appreciate your input. For now, I'm just going to stick to the bar chart. The funny thing is you get this potential head and shoulder top, right, on Bitcoin. It's a shoulder, it's a head, and this was the first right shoulder that was invalidated when we got above here. But then we get the second potential right shoulder, meaning you could see this as the entire right shoulder, or just see this as the right shoulder. This is what you call a complex head and shoulder pattern, because it is a head and shoulder pattern, but it's not as clean as you'd like it to be, right? There's time spent, there's price action in between the shoulder and the head, making it a more complex pattern. So you get this head and shoulder top, right? But you didn't only get this head and shoulder top in Bitcoin. You also get the head and shoulder top. Let me check. You get the head and shoulder top in the S&P, right? Head and shoulder top. Bear trap, springs back up. You get the head and shoulder top on the Dow Jones, right? Every index all of a sudden has a head and shoulder top. Even the Nasdaq kind of had one. When stuff like this happens, when every single person in the world almost every single person in the world is going to look at this pattern or look at this chart and say, well, this is obviously a head and shoulder top. It is a head and shoulder top on many different markets. This is an easy short, right? That means most people will have to be right on this trade. And that almost never, ever, ever happens. Now, just because we did not break down doesn't mean this isn't the top. So this is kind of a difficult position to be in. You can either think and say, well, I'm going to wait for this to break down again. What you get on head and shoulder tops is usually you get a few fake outs, right? What I just said, if it's too obvious, people are going to be shaken out. People are going to be short here. They're going to get caught offside. Price reverses on them. They're going to have to cover their shorts and you get a little short squeeze up. What happens oftentimes during market tops is price will go back down again, potentially fake out again, and get another bounce before, after 2, 3, 4, 5 months of topping price action where you finally get the breakdown. There's a few things you want to look at. You could potentially turn on the 200-day moving average, right? If you're in an uptrend, the 200-day moving average is clearly trending up. But what you want to see is this kind of price action. If the 200-day moving average starts trending up, right, and we get it doing something like this, and price blends into the 200-day moving average, and then we get another breakdown, that will be a good shorting opportunity. If you want to be long this market, which I am, there is the play where you long the head and shoulder failure, which is a very good pattern to trade. A head and shoulder failure occurs when there is a head and shoulder pattern, but then price breaks through the high of the right shoulder in this case. So what I did was I had a buy stop order. I had a conversation with a friend in the gym last week where he said he did not know what a buy stop order was. So let me go ahead and explain to you guys what a buy stop order is. When we talk about a stop order, right, we're usually thinking of a stop loss order. So price goes down, hits a certain price, and you either have a limit or a market stop order taking you out of the trade, which is something you always want to fucking do. You always want to have a stop loss because you want to know how much of a loss you're willing to take on the trade. And you can always say, well, prices, you just said price will always go up, right? It just takes time and then prices will eventually go up. That is true, but you don't know how much prices can go down in the meantime. And at the end of the day, you want to stay liquid, right? You're in this, you're trading because you want to stay liquid. If you don't mind being illiquid, you might as well just buy real estate, fucking dump your money into a house or an apartment, and just have dead money sitting there. But people trade, people invest because it keeps you liquid. You can just buy and sell like this, right? And get your money back and potentially get into a, the light just died on me, but doesn't matter. You can get into a potential trade, a potential better trade that will give you more of a return, a higher return on the money you've invested. In any case, most of the time we're thinking stop loss, right? But you can also place a buy stop order, meaning you can easily go with the trade. So if you place a buy stop order at this price here, which is 102,718, if price crosses this price, your buy stop order is activated and you're in the trade and you can go with the trade. A buy stop order is really nice to use if you're trading a pattern that breaks out, right? If you're trading breakouts. So that is what I did. I'm in this Bitcoin trade now. My stop is below the breakout candle, and we'll see what happens. And the way you determine your take profit, and please, guys, when I'm looking at a take profit target, it's not the exact number I'm going to take profit at, right? It's an area I'm going to look at. It's an area I'm going to pay attention to. If anything happens that gives me the idea that price is going to reverse on me, if anything changes, I'm just going to bail out of this trade. But the way you determine the take profit for a head and shoulder failure, there's a lot of ways to do it, but the way I do it is I take the height from the neckline up until the top of the head, and you overlay it with the breakout price, and then you get a take profit of around $120,000. So that is what I'll be looking at. If we get a break through the top of the head, I will be looking to add around here somewhere. So yeah, that is the current Bitcoin trade. Then we have a Euro Stoxx. The Euro market has been doing pretty good. We have this trading channel on the Euro Stoxx. Let me just fix it a little bit here. We get this big channel, and then we have this sloping trend line down. As you know, I don't really like playing diagonals. I wanted to see it break out of the horizontal as well, which it did. So this is also a breakout trade, meaning for this trade, I also used a buy stop order. So my entry point was right over here. This was my entry. So it's looking good. It's looking good. The only thing I don't like is I'm in a bunch of trades that are kind of the same, and they're all indices. I'm in the Euro 50. I'm in the DAX again. The DAX, you could see this as a small cup and handle, cup with handle. Got long at the break out of this one. Stop is here, and we're trading it up to the target of 21,400. So I'm in this index, and I'm also in the FTSE, the UK 100, which kind of looks the same as the Euro 50. Just that here we have a symmetrical triangle. Again, traded the breakout, and target is 8,900. Yeah, so there is correlation there. While obviously I know the UK isn't part of the EU, I do think this will be a kind of a correlated trade, especially also with the DAX. So I'm going to have to be really careful with this. I usually don't take 3 correlated trades. I will take 2 at the same time. But the reason I took 3 in this case was because the pattern I traded on the DAX is very much different than the ones on the Euro 50 and the FTSE. The DAX is a continuation trade with a very small target, and Euro 50 and FTSE are breakout trades out of a big symmetrical triangle. So the target is much higher. They're different trades, right? A better example would be where I don't take the both of the trades is we have Ripple here. We get a run up, then we get a consolidation period, which could be a bull flag in this case, or a pennant, but it is a continuation trade. Got the breakout, and then if you look at Cardano, it's kind of the same trade, right? I did not take this because again, they're both altcoins. It's the same trade. Ripple's already given me a really nice profit up until now. If I get into this trade and crypto reverses on us, Ripple's going to go down. Cardano's also going to go down, right? So there's no good reason for me to have both trades on. While I might as well, and I could, and I have, just add to the Ripple trade. So now we're speaking of Ripple, let's just go over this trade right now. Very simple, very straightforward, right? There's not much to this. Again, you get the run up, and then you get a brief consolidation, which started on the 3rd of December, which is already over a month now. Again, also for this, used a buy stop order at the high here. So my entry was around here. So yeah, now we're just sitting this one out. I have not added to this trade because I did not get a good entry yet. Might use the 8-day moving average, but crypto is pretty volatile, as you guys know. So the 8-day moving average isn't always a good entry point. If you look at this here, it would have been the perfect moving average to use, but that is hindsight analysis, and we don't really do hindsight analysis here. First target is the 370. 370, which is the target of the continuation pattern. And then we have a monthly ascending triangle, of which the target is 475. Let me show you that one. I'm not sure if it's, yeah, there we go. So you get the ascending triangle here, right? Which is a very, very big, triangle. It's since 2017, right? If we get a monthly close above around 250, then you have a take profit of 475 on this pattern. So that is the Ripple trade. Looking good. I have trilled my stop up, so the trade is already in profit. I obviously don't want this to wick down and stop me out, so I got to be careful with trilling this stop. Your 50 DAX, FTSE, you've already seen those. Then we have a potential breakout on oil, crude oil, US oil. Yeah, it's not I don't love it, but it was good enough for me to take this. I was in another trade on crude last week, but I got stopped out, which was really, it was a bad trade. But again, we're back into this, and I still think this can run up pretty aggressively. Volume is coming in big time as well. That is also something to keep in mind, guys. If energy prices go up, people are going to feel that, right? You're going to feel it at the gas station. You're going to feel that when you turn the heating on. Just the cost of living will go up, especially for people who, when energy prices go up, people that have it the hardest in life, they will feel this the most. And again, people who can barely spend the money, can barely spend their money on gas, they're not going to be buying your altcoins anytime soon. So those are the trades I'm currently in. And then we have, I think I've already went over this last episode. We get the Euro Yen potential short, which is it's a beautiful pattern. It's a big head and shoulder top with a right shoulder forming as another head and shoulder. So it's a head and shoulder inside another head and shoulder. And they usually tend to do really well. So if we get a close below this sloping trend line, which is the diagonal neckline, I'm definitely going to be a seller of this market. Then we have the British pound, Swiss franc, which is currently inside of a rectangle. So you can either take this long or short. It does seem like it wants to break down. So if we get a daily close below the bottom here, I will be a seller and target this price here. Rectangles are really, really nice to trade. If you're early to recognizing a rectangle pattern, you could of course trade or try to trade the range. If you are a range trader, I am not, but you could. I'm waiting for the confirmed breakout of this rectangle. I'm looking at Meta as a possible rising wedge. A rising wedge is a pattern that is a reversal pattern. So you get a big bull run, right? You get prices just go up, and then we get a rising wedge. If price breaks out of the rising wedge, you don't want to see any significant pullbacks into the rising wedge or testing the bottom of the rising wedge. If we get a breakdown, you want to see this resolve rather quickly, and you want to target the start of the rising wedge pattern. So that is what I'm looking at for Meta. Not sure we're going to get it because markets are looking pretty good, but we'll have to wait and see. We'll have to wait and see if we get it. My charts are looking kind of weird. Like the lines are just off for some reason. Like seems almost like somebody's been just messing with my charts, just moving everything slightly. Not sure what the hell is going on. That's why I keep switching between regular and logarithmic, but because I almost always use a log chart, but it seems like somehow these were drawn on a regular chart and then I'm on log and they don't look good. Not sure what the fuck is going on. Then we get the dollar Canadian. This was a great trade. Looked really good, and then I was stopped out. We get a small continuation a box over here, which is now broken out. We got the breakout. I'm not sure if I'm going to be long this market because I don't think the risk reward is really there anymore. If I'd still be in this trade, I would have added to the trade here. But right now, I mean, you know, my final target for this trade is pretty close to where we are now. Still over a 2-hour trade, so it can still work. But I'm not sure I will be taking this. You could tighten it up a little bit more by going down on the time frames. Yeah, we'll see. We'll see if I take this. I have more than enough positions on as it is already. Let me check what else I have for you guys. We have Allianz, which is forming a either a cup and handle, or an ascending triangle. It could be both. You could play them as such. So I am looking to buy Allianz at the market open Sunday night. My bad. Monday afternoon, my time, our time, Dutch time, and target 328. So that is the trade I'm looking at. I usually don't go over stocks with you guys. I do have stocks here, but I'm not going to go over every single stock. There's just too many charts I look at on a daily basis, and that would mean these streams would take 700 hours per stream. And that is why I every single time ask you guys, is there a chart you want me to look at? Please drop the ticker in the comments. Because what I do now is just go over my trades. But I can imagine you have something you're looking at yourself. Something you would want a second opinion on. So if I can help out, do let me know. Amazon could be interesting. It's forming a kind of a descending base, or a bull flag as well. And you could target, I think I've already gone over this trade. A measured move target would be done as such. If it does break out of here, I think I will be buying Amazon. Especially if markets are going to keep rallying, right? It's just looking really good. Most people will think, wait a second, it was last year. It was $80. Why would I buy it at $225 now? I don't have really the time to explain to you why buying stuff that is cheap is not the way to go. It's pretty funny, right? Even in crypto, and we've went over this last stream, people always want to buy the cheap stuff, man. They always want to dollar cost average into cheap stuff, pretending and acting like it's a guarantee it's going to go up eventually. You have no guarantees, guys. There are no freaking guarantees. And it's just survivorship bias, right? You only tend to remember the times you were right, and you just forget all the times all those people were wrong by DCAing into their favorite coins. things are cheap for a reason and things are expensive for a reason, right? If you buy a Rolex in 5 years, you're going to be able to sell it with a profit because there's a lot of demand for Rolexes. If you buy a freaking Guess watch or Gucci watch, in 10 years, you're not going to be selling it for a profit. There's less demand. There's a lot more supply. There's a reason there's a difference in pricing with everything. It doesn't matter if it's watches, if it's cars, if it's stocks, if it's crypto. Demand and supply works the same way. If things are expensive, if prices are moving up, that by definition means there is a lot of demand, and supply cannot keep up with that demand, and prices just go up. So buying expensive stuff is almost always better than buying the cheap stuff. But again, if you don't believe me, just do whatever you want. Then we have Nikkei. Nikkei, I think I've already went over this. Kind of the same as the pound Swiss. It's a rectangle. So yeah, either way, short, long, we're willing to take both sides of this trade. Then we have the dollar, Chinese yuan, huge ascending triangle, very big ascending triangle. This is a beautiful, beautiful setup. There's volume coming in when we're getting close to the breakout, which is what you want to see. Obviously, this here, holiday season, much lower volume. But as you can see, the last few weeks, last few months, volume has been way above average. So that is really nice. I think this is going to be a big trade next week or the week after. So yeah, definitely keep this one in mind if you would do trade Forex. And then we have gold to end this stream with. Gold has already broken out of this triangle, but I'm waiting for it to cross the last high. Yeah, that is pretty much it, guys. As you know, I go over crypto quite a lot. Oh yeah, I'm also in Solana. I forgot to add this. I got long here at 223, and I added to the trade here at the breakout here. So my stop is now below this daily candle at 252. The shitty thing is, it's really hard to keep a crypto position running with a tight stop because it's volatile. But because it is volatile, you want to trail your stop up, because if you don't, you're going to give back way too much profit. So that is the complexity of crypto. Now, of course, you could say I don't use a stop and I'll just leave it open and see what happens. But I do think it is. I do. That is also what I got to tell you. What I got to say about buying the cheap stuff, right? It's kind of weird that people just keep buying on the way down. Because if your argument is this is a good trade because prices are down, where does that rationale end, right? Prices go down, you're like, okay, it's cheap, so I'm going to buy here. But by that logic, cheaper is always better, right? So prices go down more, I'm going to buy more because prices have gone down. Prices go down more, I'm going to buy again. I mean, look at I think there's probably millions of examples, both in stocks and crypto, where prices have never recovered. I do not understand where the assumption comes from that everything eventually goes back up again. I mean, it may go up, but that's not the same thing as going into profit or trading back to new highs. It is such a dangerous assumption. It is such a dangerous assumption. And you can literally, quite literally, have 10, 20, 30, 40, 50 profitable trades. All you need is one retarded trade where you went like, well, it's going to go up eventually, to undo all of your good trades. You just need one really shit trade to undo all of those profits. Not even undo all of your profits. It just takes one shit trade to completely wipe you out of the game. I don't know, man. Maybe I'm just full of shit. So yeah, guys, if you have not subscribed to this channel already, please do so. If you like this video, I would appreciate a like. Do let me know if you have anything you want me to look at. Last time I asked you guys, let me know where you are watching from. If you are a trader, if you're a professional trader, if you're a recreational trader, what do you trade? How long have you been trading? I want to get to know you guys a little bit and see who the target audience is. So for now, I'm gonna wish you guys a happy end of the week and good trading for the week ahead.